Here's a question I heard constantly during 14 years in the car business. What credit score do I need to buy a car? And here's the answer that surprises almost everyone. There is no minimum. People get approved across the entire credit range, from the 500s all the way up. But your score decides something much bigger than approval. It decides the price of the money. And on today's loans, that difference can be more than $10,000 for the exact same car. In this video, I'm going to show you exactly how lenders sort you into tiers, what those tiers cost in real dollars, why the score you check on your phone is probably not the score the dealer sees, and the highest impact moves to improve your position before you buy. This is the stuff that happens on the dealer's screen that nobody explains to you, until now. First, let's kill the myth. There is no magic number where car buying becomes possible. Lenders approve buyers at every level. What changes is the rate, the down payment they require, and sometimes the loan terms. Auto lenders sort every applicant into 5 tiers. Super Prime is roughly 781 and up. Prime runs from about 661 to 780. Near Prime is 601 to 660. Subprime is 501 to 600. And Deep Subprime is below that. Here's something most people get wrong. A 661 puts you in the prime tier for auto lending, even though most credit websites would call that score just fair. Auto lending has its own scale. You don't need a 750 to get a respectable rate. About 2/3 of all car financing goes to buyers at 661 or above, and the average used car buyer's score is right around 682. If your credit is imperfect, you are not an outlier. You're the average customer. Now let's talk real money, because this is where the tiers stop being abstract. As of early 2026, a buyer with excellent credit averages around 4.5 to 5% APR on a new car. A deep subprime buyer averages around 16%. On used cars, the spread is even wider, roughly 6% at the top versus nearly 22% at the bottom. Here's what that means on a $30,000 loan over 5 years. The excellent credit buyer pays around $560 a month and under $4,000 in total interest. The deep subprime buyer pays around $730 a month and closer to $14,000 in total interest. That's roughly $10,000 more. Same car, same price, same lot. The only difference is the score. And this is why buyers who only look at the monthly payment get hurt. The payment hides the total cost. Always ask what the loan costs in total, not just per month. Here's the part that catches people off guard at the desk, and I watched it happen over and over. A customer checks their credit app on the drive over. It says 700. They sit down, we run their credit, and the number that comes back is 650. They think we're lying. We're not. We're just looking at a completely different score. Free credit apps typically show you a Vantage score. Auto lenders overwhelmingly use something different, a FICO auto score, which is built specifically for car lending. It weighs your past auto loan history more heavily, it runs on a different scale, and it can differ from the number on your phone by 20, 50, sometimes even 100 points in either direction. So before you shop, check your actual FICO score through your bank, your credit card, or MyFICO, and treat the app number as an estimate, not a promise. If you walk in expecting a rate based on the wrong score, that conversation at the desk is going to feel like a bait and switch, even when it isn't one. Now, here's what happens on the dealer's side of the screen once your credit comes back. The lender approves you at a wholesale rate called the buy rate. But the rate you're quoted can be higher. The dealer is allowed to add a markup, usually capped at about 2 to 2.5 points, and present that higher number, the sell rate, as simply your rate. The difference is dealer profit on every single payment you make, and there is no requirement to tell you it's there. Research on real loan data found that nearly 4 out of 5 dealer-arranged loans carry a markup. This isn't illegal, and it doesn't make anyone a villain. Financing is a profit center like any other department, but you should know the game being played because there's a simple counter to it. Walk in with your own pre-approval. When you already have a rate from your bank or credit union, the dealer has to beat it to win your financing. Now the markup works in reverse. They're competing for you instead of pricing you. If you're within reach of the next tier up, waiting 1 to 3 months and making a few smart moves can save you thousands. Here are the highest impact levers. First, credit card utilization. This is the fastest one. Pay your card balances down below 30% of the limit, ideally under 10, and do it before the statement closing date because that's the balance that gets reported. Improvement can show up in 1 or 2 billing cycles. Second, check your reports for errors. Roughly 1 in 5 consumers has found a confirmed error on a credit report. Disputes take about 30 to 45 days, so start 2 months before you plan to shop. Third, if you have a family member with strong credit, being added as an authorized user on an established, low-balance card can lift a thin file meaningfully in about a month. And when you do start rate shopping, compress it into a 2-week window. Multiple auto loan inquiries inside that window count as a single inquiry on your score. Shop hard, but shop fast. If your score is in the 500s and you need a car now, you still have options, but the order you try them in matters. Start with a credit union pre-approval. They're consistently the most forgiving mainstream lenders. Consider a cosigner if someone in your life is willing. Put more money down because a bigger down payment offsets lender risk and can improve both approval odds and rate. And treat buy here, pay here lots as a true last resort. Those are the lots where the dealer is also the lender. Rates commonly run 20% or higher, down payments are steep, and here's the part most people don't know. Many of them only report to the credit bureaus when you pay late. So the loan can hurt your credit but never help it. If you have to go that route, get it in writing that they report your on-time payments. One more thing, a bad credit loan is not a life sentence. Make your payments on time for 6 to 12 months, get your score into the mid-600s, and refinance. Buyers who refinance through credit unions save around $80 to $100 a month on average. So what credit score do you really need to buy a car? Whatever score you have today, because there is no minimum. What matters is knowing which tier you're in, what that tier costs, and what moves change it. Check your real FICO score, not just the app. Get pre-approved before you walk in. Shop your rate inside 2 weeks, and if the numbers don't work today, know that a few months of smart moves can put you in a completely different tier. Know your number. Know your tier. Keep your emotions in check. We make these videos so you always know what's going on, before you walk in, not after you've signed. Subscribe for more from the other side of the desk.